All right, guys, what's going on? It's Vijar. Today we're going to do a little stock research, investment research, a little bit into a one-on-one process. If you got questions, got answers, comments, I don't care. Whatever you think you want to talk about. I'm just going to give you a little insight on how I look at the news, read news, look at ideas, come up with ideas. I got 3 tabs open, keeping it real simple. So Seeking Alpha, Yahoo Finance, and CNBC. If you got questions about anything, please just let me know. I'll just answer them as I see fit. That or Twitter, YouTube or Twitter, whatever works best for you. So this is so I usually start my day checking out CNBC. I'll read 1 or 2 headline clips. I'll look for what's popular quotes, market movers, top, bottom, anything that's kind of what they think is kind of trendy. It's good to kind of just see what maybe either signal or noise. It's usually 99% noise, which is fine. But once in a while, something popular will show up that I don't know or I don't realize. Like this GameStop released earnings. I don't follow their earnings, but they're doing a deal with FTX. I think that's pretty important, especially if you're in the crypto space like myself. So what are they doing in the crypto space? What's the partnership with FTX? I'd click it. I'll read it. I'll go through it. The Amazon Jassy move about remote work. That's interesting because it's a tech company. So important to kind of keep my head up in that space and just kind of listen to what's happening. So that's how I begin usually, and then I go backwards, and I'll go through ideas. I'll be like, all right, is there anything important? This is a meme stock, so maybe I'll look up stuff. Bed Bath and Beyond is here, so I'll type in Bed Bath. Something happened last week to the CFO, which was sad. GameStop releasing NFTs. So they're going to talk about their marketplace and what they're doing. Why did they lose money? It might be of interest, not of interest to me at the current moment in time, but I'll get over that. And I'll look for other ideas. I'll just quickly just go through a few ideas. I don't spend too much time on CNBC. Where I do spend most of my time is on Seeking Alpha because one, I have a login and a subscription account, which is like $20, but it gives you access. I've been writing for Seeking Alpha for like 8, 9 years or something, so I have a little bit of history since I don't do it anymore. But you can curate your feed, which is 100 times better than most others because it does 2 things. One, uh, it provides research by individuals and independent writers. So they're contributors, they're media outlets, sometimes they're hedge funds, sometimes they're investment researchers, stock researchers, or professionals. A lot of people read this stuff on Seeking Alpha because it's just easy to read, and it's like a lot of companies that you simply don't find on the CNBC headlines. So you can see some of the examples. I got a couple watch lists that you can kind of look into, which we'll get into next. But one, their feed is much better, so I look straight to pricing. I can see if the market's up and down, where globally, where the crypto, where the futures are for tomorrow, what's happening in the world. And then based on what I'm reading, it kind of does a little bit of recommendation. It's not great, but it's much better than most. So it's like a lot more signal than noise in my case. So trending news, pretty high hit rate. As a tip, if you're a young person, I read the Wall Street Breakfast. It's a daily email from Seeking Alpha when I was in college every day to prepare for all my interviews. It was probably the best. It beat uh, Wall Street Journal. It beat Bloomberg at the time. Bloomberg is much better today as a editorial piece, and almost anything else. Yahoo Finance doesn't matter. Wall Street Breakfast has the best if you're looking for macro level ideas. Just read news. And then there are a lot of popular writers that consistently write about specific topics, like Brad here, this guy Rewa, a couple other guys, and then just these are like tidbits. If you're owning stock in something like AGNC, Google, ETFs, Apple released the new iPhone today, so there's so many things that I could just quickly say, all right, is it related or not? And then I move down. I have a portfolio or watch list, I should say, more of things I'm just looking at in the industry, and I don't use anything else. I just use this because I just want to track specific tickers, and it just tells me, okay, this company's up 12. something else is down 7, 2%, whatever, and then related to those earnings, it just provide related to those companies, it provides me with companies that are like that are related to that. So headlines, tracking portfolios, dividends, presentation, investor presentations, whole so many things. And like I would want to see this $100 million stock buyback plan because TaskUs is a great company. Um, Maybe something with Spirit or listen to what Michael Dell has to say. And then sometimes I'll go down, not often, but one, editors, Seeking Alpha, that's why I like them. Seeking Alpha's editors picks, terrific. And then notable call and insights usually covers things that I've missed. So I think that's probably the most important thing for me because I'm usually not reading this every day, but 2 or 3 times a week, I'm usually missing something because I'm not paying attention to other people's calendar. I'm focused on my own, and then I'm waiting for information to come to me, and then I'll make a decision based on that. Articles I've read helpful when I'm looking for things like, oh, what happened? There was a deal with OpenText to buy Micro Focus. Great arbitrage deal. Let me go back and look at the presentation that I read 3 weeks ago, so I don't have to reread it, and then pick out the bullet points. Walgreens, I thought that was interesting for a couple reasons. Tech Target, Delta Technologies. I read a lot of other authors. So like Donovan does IPO updates, great stuff. A lot of venture capital updates that I just don't read myself. And then a lot of people follow me for the same reason, but I love to follow other authors that do a great job. And then Day Watch, just this is a better version. I'll show you how it looks in Yahoo Finance, but in Seeking Alpha, it's just clean. Like there's no noise. You can see there are no ads here, so it's like super simple to read this stuff. And then I'll just go through. I usually don't even go this far down. I usually go up to articles you've read. I'm like, okay, I'm good. I'll pick out 2 or 3 articles that I need to like look at, and then I'll just close it. So I mentioned TaskUs. This is a big company, and $100 million stock buyback plan. That's huge. And TaskUs is a pretty young company. It specializes in like content service management and content security for a lot of social media companies. And this is excellent. Like big company, young team. They probably have to do this. The stock is super cheap, $1.4 billion market cap, so that's awesome. Good for them, and that's why stocks like they're going up. So what do? I go through. I look at what are the latest articles. I'll look for like the news and the analysis, and I'll just say, all right, one obviously 52-week low. It was at almost 70, $80 last year. It's down quite a bit, 80, 90%, 80%. So that's not a good sign for them. But if I'm an investor, solid time probably to get in, or definitely a good time for them to start buying the stock. So it was almost 6 times. It's like almost a $10 billion business at one point. And usually I'll go through. They did earnings last month. I would break down if I was really interested in this company. I would break down their buyback plan. Like when are they going to buy it back? How many shares are going to buy back a quarter? Um, are there any other sales happening, like secondary sales? Unlikely. What's like anything that's peculiar, and like how are they buying it? How are they financing it? Through either cash, they're raising equity to buy back, or they're raising debt. And then I'll just go through the financials sometimes. And in Seeking Alpha, it's not as good as Yahoo Finance, but I can like pop up the earnings and the revenues pretty quickly. They've done a great job upgrading this in the last 6 years, so it's very impressive by the team. And it's just all this other stuff. So what do I do usually? I usually, if I don't find headlines in CNBC, I'll go to Seeking Alpha to find something more particular. If I find something that I'm tracking, like TaskUs, I'll look for the notable headlines like earnings, buyback plans, research reports by credible investors or analysts, and then I'll take this ticker and I'll move into Yahoo Finance, and then I'll just I usually don't even look at anything Yahoo Finance. I go straight to the financials because they get access to information straight from Capital IQ and S&P and other data sources that are just more credible and just much better overall. So I'll pull in, I'll say, all right, same information, from top line, but there's so many ads, so much noise. I don't want to read any of these articles. I don't care for any of this stuff. Maybe once in a while I'll pull up a similar ticker or what else people are watching, because people have Yahoo Finance accounts, but I don't. So I'll go in. First thing I usually do is go straight to profile. So we got like $60 stock. Uh, I want to see a couple things. I want to see what sector and industry it's considered, how many employees, 40,000. A lot of them are overseas in this case. Where are they based? Texas. That's just good to know. Like, is it China, England, India, Japan? Who are the founders and CEOs? In this case, they're co-founders. They're in the mid 30s. These are great guys. They've been doing it for like, I'll pull up the age. I go down. I'll read the description to see if it like jives with what I read last time. Sometimes they change things, and you could see company was formerly known as TU Topco, changed its name in 2020. That's when I think they were preparing for IPO and Blackstone invested. Founded in 2008, so it's a pretty young company. And that kind of just gives me a quick one-on-one of like what's happening, what the current status of this company is. And if like the team is like, you look up the other roles and stuff, CPO, CFO, COO, and all right, so this is where the meat is. You go in and look at the market cap. I go into straight up look into valuations. I'll say, what's the company worth? One, what's the enterprise value? It tells me how much cash or debt it may have. The PE. I'm most interested in the cash flow multiple, so like the enterprise value versus the EBITDA. So total EV right here divided by the EBITDA, which we'll get down to. If it's below 10, attractive. Cash multiples, that means they're buying a very healthy business that's positive and just generating 10% IRR annualized on earnings. This is actual cash earnings yields. And then I'll move down. Right? Sometimes I'll look at the 52-week close of the range, but I'm mostly interested from a high level, like what are the margins, profit and gross. Then I'll look at the ROA and ROE, so return on equity. This is pretty healthy. I would once I go beyond this deep, like initial deep dive, I'll say, what's the trending ROE? Is it like above 10% for the past 3-4 years? Like, all right, if it's not, that might be a problem. It might be skewed. And then our revenue, $1 billion, right? It's just 900 million. They're going to hit $1 billion. That's really hard for most businesses. So this company is doing great. It's got very high EBITDA margins, and most important, it's got high quarterly revenue growth. So great way to begin. Like a great business moving in the right direction. A lot of the business is outsourcing, so it has a lot of good like tailwinds, just pushing it forward. So it's a fantastic position right now. Seem to have operating negative cash flow, which there might be in the spending money or like reinvesting it somehow or whatever. I'll have to look into that deeper. Book value per share is not as important anymore because a lot of companies like this have intangible assets. It's hard to look at the tangible assets and equity on the balance sheet. What else? And then I'll look at the cash and the current debt. This is for like two reasons. One, I want to know if they have cash. Like if they have too much cash, like hundreds of millions, like well over 100 million, this amount looks like it was raised from the IPO. But if it's like 700 million and they don't have 700 million in revenue, that just means they have a lot of cash in the bank, but they don't know how to generate it because they got it from a capital raise. So it's like a yellow flag. The other thing is like I need to know how much their debt to equity is. So like this seems to be reasonable at the current moment. 300 million in debt, 1.6 billion market cap. They're generating 900 million in revenue. They got EBITDA, so like they have the earnings power to pay off 300 million, and they could probably raise more and get more favorable terms if they keep growing. And then sometimes I'll look at like the average volume, shares outstanding once in a while. If it's like a meme stock where like the float, the insiders are like an important metric, I'll check that out. If not, then I just pass on it. And then, depending on the company, if it's mature, I'll have a dividend. If not, like this case where it's high growth, it won't. So I'll just pass like on reading any of that information. But high level, that's usually how I begin. I like do this in 5 minutes, 10 minutes, taking about 10 minutes here. And if it's good, it's interesting, I go straight to profile. I don't waste any time. I pull up the company, taskus.com, and I'll say, all right, that was direct. The company's main website's here. Sometimes it's an investor relations website, but either way, I want to look at this business. as if I was either a customer or a first time investor. And I was just like, all right, what does this company do? Okay, industries, gaming, fintech, social media, high tech, retail, and commerce. Cool. I know what industries they focus on to give me an idea what they don't focus on. What are the services? Customer experience, learning experience, trust and safety, like content security, like I was saying, uh, and like where are they based? So they're much more global than I knew of them last time. That's fine. That's great. That's how they get to 40,000 employees. And then I would push forward. I would say, all right, what's next? I could go through more information. I could go through the entire website. I could figure out what information I need to know, what information I don't need to know. But usually I go straight to the end, right to the bottom, and I'm looking for, I don't see it here, but I'm looking for the investor relations tab. So I'm about to reject these cookies. It's hiding up here. And investor relations will give me information directly from the company, which is way more important. It gives me an idea what the next step is when it comes to investing. Like, what is the company doing in detail, quarter by quarter, management discussions, analyst representation, presentations, etc. So they announced this. Seeking Alpha probably got the information from their website. They participated at a conference. That would have been good to know as a shareholder. Maybe I can look at their information. So like, I'll pull up some information here. I got investor presentations. I can go through this if I want. I can watch the webcast, which is great. So there's so much information I can pull straight from the investor relations tab that is so critical. So quarterly results. I can go ahead and verify a lot of information that I didn't have from Yahoo Finance directly from the company. I could download it as a PDF in most cases, and I can pull up the non-GAAP and GAAP adjusted earnings, and I can decide what the company is really doing on my own. I have to make my own decision here because the company's not going to give me any guidance, and neither is anybody else. So if I read information from somebody else, I need to digest it and make my own decision at the end of the day. So we got a quote here from the management team, co-founder and CEO. We got a more breakdown on the third quarter and the full year outlook. And I can go into this if I like. I'll do this at another time for a company I probably want to invest in. But I'm just pulling up examples because I don't really know TaskUs that well. So they just did this today, actually. So they announced it last week. I could probably hop in, look at it recorded. Yeah, webcast somewhere. I can look into the details of the repurchase plan, how they can do a stock buyback. Probably announced it at the Citi investment conference today, so that's great. I can do that too. I can go through and like look at live presentations, live Q&A from experts that probably have tens of millions of dollars invested in this company. And then when I get to the website page, I really like to, because companies do this now, they didn't do it before, like 12 years ago, 10 years ago, because now presentations online are really easy to produce. I'll go through the investor deck and I'll just like, all right, what does this company do? It's profitable, it's growing. These are the margins. This is the Glassdoor score. So there's so many teammates. Where are they based? How are they built? Like all these details that I can like now just, it takes me from 10 minutes to 20 minutes of research. And I could probably speak about this company better than most stockholders, retail investors, because they simply haven't spent the 20, 25 minutes to go into a company and say, hey, all right, this is the areas where they're going. They're targeting these changes in the industry from cable to streaming or restaurants to food delivery. So they're targeting digital businesses. Awesome. What are the new service offerings? Look, digital customer experience, very important. As I mentioned, content security. I know that's how I know about them. And they're really good at that stuff because they put a lot of manpower into that. It's all labor intensive. And I can just keep going through the entire deck and just be like, all right, what does this company do? How does it operate? What are people thinking? 100 clients globally, top of the top in some of their sectors. So it's really helpful to do this. I usually would end up on this. I'll write some type of summary, which maybe I'll do a recording on that later. And then I'll just go through different ideas, just be like, all right, what else are they breaking down? What are the metrics that they think are important that maybe I can't see or can't find anywhere else? And then I'll just kind of go through this in its entirety. So this is great, 37 pages. It's more than enough information. You could get everything you need to 20 pages, but they got an appendix and everything. So that really wraps it up. They'll provide the adjustments at the end. They'll provide so many more details, and I just go back, and then the real work begins. This is just top level. When I look at 100 companies, I'll pull up. I'll do this for like two or three of them, and be like, all right, which one has the best? What has the best details? Like the net income margins, also 17%. They're increasing their margins, or their margins in this case decrease from 17 to 15. All right, let me find out why. Is it because they're a bigger business? Did they go from 700 million to 900 million? Maybe they make less on margins, but they make more dollar for dollar. Let's find out why. And those are the type of notes I keep writing and keep understanding and keep expanding on. But just doing this high level 10, 15, 20-minute deep dive, this is the exact process that I use. It will give you a head start on any business. And if you do this once a quarter for your top 3 investments, you will be very much in tune with how management's thinking, what the top investors or shareholders are asking, what the market situation is going to look like, what's the volatility, where is it coming from, where the new revenue and products are expanding into, or what they're selling. So this is the best way to just keep track of everything that's on your plate, and keep it minimized. So you could do all this within an hour or two, and then you could review your portfolio and decide where you want to either increase allocations or decrease allocations. So that's going to wrap it up for today's stream. If you got more questions or anything, always feel to tweet at me at Vijar Kohli, or just comment on any of my YouTube videos. I'll try to find it whenever I get a notification. Until next time, guys, take care.